Prices didn't move a whole lot in the commodity market, Sarah, but in the stock market, they certainly did. I'm sure Santoli will hit that later on in the show in the market zone if he has not done so already. Okay, look at this. So no deal was made. What they're supposed to do is this. January 1st, their current production cut deal for 7.7 million barrels a day off the market ends. There is a debate about whether they should extend it for 3 more months. In other words, delay a production increase. They could not come to a resolution today. So the meeting carries over to tomorrow. Then they've got the OPEC Plus meeting. Look at the XLE, down 4.5%. You look at the OIH. That's the service stocks. These are the stocks you go out, and if you're going to drill a well, these are the companies you hire. They got hit even more, down 4.8% today, guys. And some of the big name stocks, and I'm not picking on these 3, but they stick out. EOG, Continental Resources, and Transocean Offshore all getting walloped. The point is this. Energy has been the hottest sector for the month of November because everybody expects OPEC to carry on their production cuts, extend them. If they can't get a deal done because the UAE is unhappy or Russia doesn't want it or Kazakhstan, literally Kazakhstan, tries to veto something, which could actually happen, the markets could get very jittery, very nervous. We saw a little bit of that today, guys. The meeting rolls over to tomorrow morning as well. And hopefully, for the traders' sakes, OPEC will be able to extend those cuts by another 3 months. This is not a world that needs more oil, Wilf.
Well, I was just going to ask, Brian, if you could sort of walk us through that deliberation even further. Why would some countries be opposed to the cuts right now? And how does the fact that oil prices have climbed back to the $40, $45 region, which is what, break even or around there for U.S. producers, change the whole equation?
The vaccines help change it. Sarah, you guys talk about it, right? You just asked Etsy, what are you going to do when people don't need masks anymore? Well, OPEC is looking at a post-COVID world. I know it's not here tomorrow, folks, but we can see the finish line at least. It's going to be a bad couple of months, but the vaccines are on the way. There we go. Look at oil production, too. U.S. oil production peaking out at 13 million, down about 3 million barrels a day from that. Here's the problem and the answer to your question, Sarah. Saudi Arabia has been gaining market share. Some countries are taking bigger hits than others. For example, I mentioned the UAE. Everybody we talk to, all the reports, the UAE thinks maybe they're absorbing too many of the cuts. These countries have huge social costs and budgets that are based on the price of the hydrocarbon. So a UAE, one of the core members, if you will, says maybe, well, we're taking too much. You need to either pay us or let us produce more oil. While Iraq and other countries like that, they continue to cheat because it's all they got. It's basically like everybody's in a room, Sarah. It's like the Brady Bunch, and they're all getting equal scoops, but ultimately, you know, Greg is going to want more, and they're just going to fight it out. And that's pretty much what's happening with OPEC, albeit virtually.
Shepard Smith here. Thanks for watching CNBC on YouTube.